You really need to talk to the folks here at Next Level. I've got to tell you, just speaking to the people here, they are fired up, they get it, they've got the right balance, and they're all increasing their income, they're increasing their production.
But you're dealing with people that are in the trenches dealing with this, are practitioners, had failures, had successes, learned from it, and it's about helping you not just like get through the next month, but it's about creating legacy business for yourself.
But I can tell you that you are mission focused. I know you're purpose focused, and I can tell you that every loan officer that I've communicated with that's been part of your platform has been a raving fan.
This is the Next Level Loan Officers Podcast, a proud founding member of the Real Disrupt Podcast Collaborative. You can check out more awesome podcasts at realdisrupt.com. And now, Kenneth Travis and Sean Zalmanoff.
Hey, friends, if our podcast is moving the needle in your business, don't forget your favorite podcasting device that you listen on, whether it's Stitcher, iTunes, Google. Hey, go leave us a 5-star review and help us help other loan officers. So today we are joined by a woman of many names, the Beast, the hardest working officer in California, Jennifer Beeston. How are you today?
I am good. Thank you.
So I just want everybody to, I want to talk about one of the nicknames first. So the hardest working loan officer in California. So Jennifer is killing it in production this year. She's already closed 160 million, going to be close to and exceed 200 million.
Yep.
Jennifer's average loan size, y'all, is only a little over 300,000, and she's already closed over 400 transactions this year. So just in case you're like me and you're sitting here in St. Louis and you're like, I can't learn anything from her. She's got those California loans. No, she's got the same. They're still bigger than our St. Louis loans, but she's closing a lot of business to do this and has carved out some amazing niches. Jennifer, what else am I missing in the intro right now?
I think it's important to note that as a retail lender who's not at a bank, I'm actually licensed in 44 states. And that's a journey that I started last year. And this year I really amped it up. And because of my platform that I do my business on, that's where I'm going to be seeing my growth, is not just California. So I think that's important to note, because a lot of people don't get licenses in other states. They stay very localized.
And also why your loan sizes are only an average of $330,000 because of these.
Yeah, I am the queen of California. If you have a neighborhood with like a $60,000 or $100,000 house, call me. That's my specialty. It's my niche. Those big loans, I don't even know what those are. If someone calls me with $1 million loan, I'm like, this is Jennifer Beeston.
Well, that's good too, because that's one of the things that helps keep us relevant going into the years that lay ahead of us. Retail lender as well too. Like, we're never going to compete with Chase offering 100,000 Sapphire reward points, or Citi saying, hey, if you transfer a few $100,000 into our account, we're just going to we'll beat your rate by a quarter point. That does not happen. So your loan sizes are very attainable to being relevant for years to come. I'm sorry, go ahead.
They're sustainable.
And you also carved out a niche in how you get business. So you're kind of a YouTube sensation, huh?
For mortgages, yes. I get at least 300 views. So I started doing YouTube. I'm assuming you want me to go through the story of YouTube.
Yeah, tell us about it.
So I started doing YouTube 3 years ago. I did it because a realtor partner had recommended that I start doing videos, and he wanted me to do personal videos to clients. And I was like, no, just no, I'm never going to be like, hi, Bob, I would love to do your loan. Call me. It's weird. It's super weird. I don't get it. I know there's a lot of people that do that, and God bless you, but it's not for me. I went straight to YouTube because I have people asking the same questions all the time. How do I get my credit score up? And also it was a great place where if I see something happening a lot and it's pushing me over the edge, I can talk about it, educate people, and at the same time solve a problem. So it's the clients that come to me now who have gone to YouTube, I love them because they're like, Jennifer, I already did this. I did that. I did this. I know you told me if I'm self-employed, I can't write off the moon. So I didn't. I was honest. And I'm like, oh, I love you. You are honest. Thank you. I mean, and that's something, as the YouTube has evolved, it started off just educating, solving basic questions like, a client's asking this, here's the link, right? But as it's evolved, it's let me have a platform and a voice for stuff in the industry that I think is wrong. And for me, when I get a call from someone, even if it's like, they didn't work with me, they worked with someone else, but they watched the channel, they utilized the tips, and they were able to save money or change something better in their life. It's what makes me go. The money gets empty after you've been in the business for 13 years. So you've got to have a passion.
So what was the catalyst? So you had an agent come to you 3 years ago. They wanted you to send individual videos, and then, but what was the big push that made you finally do this? And I know you're saying earlier, and everyone needs to remember this too. Like, you have to be entertained by yourself in order to be able to sit in front of a camera for 10 minutes.
I'm super entertained by myself. And the original videos, and I'm actually sad some of them are archived because they're amazing. They are so horrible. Like, I'm wearing 5 layers of makeup. I look like, I'm going to sing in a drag bar at any minute. Like, they are rough. And I'm like, so stiff. Hi, I'm Jennifer Beeston with Guaranteed Rate Mortgage. And I did it because it was my biggest real estate partner. And then once I started doing it, I watched my son, who at the time was probably about 13. He was on YouTube all the time. And I was like, oh, there's a whole generation that's going to learn things. Let's go. And then I told myself I would do it for a year, see what happened. And then it became 2 years. And then this is the year that it really just popped.
It's really interesting that you mentioned YouTube and seeing your son on it, because I was just reading an article this morning that Mark Cuban was interviewed in. And he was if you all don't know, he's a mega reader, and he spends 5 to 6 hours a day reading. Yes, the shark. But so he has a thirst and a quest for knowledge. And he talks about how the way that we consume knowledge is ever changing. And so one of the things that he was mentioning was he was talking about his children and the time that they spend on YouTube and how he sees, and was just even mentioning in the articles, like, listen, it's okay if you're not reading every day, but you need to be learning and moving the needle on however you do learn for yourself to continue that quest, which is exactly where people are headed and what you're doing. Very impressive.
Thank you. I watch my kid. So, it's turned out really well for me, but I am doing 3 videos a week. Consistency is important. You're gonna often, have stuff like I'm trying to move into a new platform right now, and it's brutal. And I have my stepdaughter helping me out with it because she's young and she understands it. And she's like, I've never seen so many views with so little likes. And I'm like, welcome to my life. Like, you've got to have a sense of humor. If you go after any of these digital platforms, you've got to be able just to go, it will come at some point if it's meant to, and just put your head down and do the work. Just like, we do as loan officers. You need to put your head down and work.
So you said something really key there. It's the consistency. And we were talking before we started here, you can't just do something twice. And so many people do it. It's like, oh, I did it twice. It didn't work. It must work for Jennifer. It doesn't work for me. So when you came up with the plan in 2018 to start doing it, did you say you were going to start doing 3 videos a week?
No. It was one of those things. It was so awkward and painful. And there's a learning curve too, because you're like, you go through all these stages of like, well, do I need to get a better camera? Do I need to get a studio? What do I need to do? And I think I was doing like 1 video a week, and I wasn't as consistent. Year 2, I got more consistent. Last year was when we started really seeing the business, come from it. Like, we started getting the calls of like, Jen, I just watched 13 videos. And I'm like, oh my God, are you okay? Like, I'm so sorry. Like, 13 videos can be super annoying. So then I was like, okay, this is a real business. This is really where my business is going. I can do what I want. I need to do more. And going from 1 to 2 to 3 has been the ticket. And realistically, it's probably going to increase even more.
So the things about this that you should all be paying attention to right now. So the beast is only dependent on herself for referrals. We all love our realtor business, but she's generating income and referrals that come with or without them. That's absolutely number one. Consistency is always, always key. And like, you're providing value. So talk to us about the messaging of what you're doing in your content and your videos and what you're putting together to really snag people in.
It's interesting because I think about that a lot. Like, how could I get more people? But at the same point, like if you go to my YouTube channel, it's not salesy at all. It's very educational. I'm kind of like the best friend who's in lending, who's going to be like, no bullshit. Hey, that guy's trying to screw you. Watch out for this. You better know this, this, and this. If you have a 400 credit score, like, let's stop pretending. You need to go work on that first. It's very blunt. And I lost my train of thought. What was the question again? I got distracted.
Just how you're coming up with the content and what.
The content. So I use real world stuff. What's going on? Something that's really important for me is veterans and active military, because I do feel like in our industry, they are the segment that gets taken advantage of the most. And if you are a lender watching this or listening to this right now, who's thinking that they can charge more because they do VA loans, I strongly urge you to stop that practice. So I do VA Wednesday every single Wednesday. And that's something that's very important to me and content driven, because it is a loan segment where I see the most misinformation. And it's also where I see the biggest rate differences. And for me, being in California, because people are always like, oh, why don't you do bigger loans? Why don't you do bigger loans? I don't want it. I mean, I love, you give me an active duty member or a veteran, like, I don't care where in the country. I don't care how much the loan is. I will be more tied to that loan than if you give me a $2 million loan from, a tech guy every single day. So my content is totally selfish. It's driven by what I'm seeing in the market. And it's driven by, what people are asking me all the time. Like, hey, Jen, I don't know about this or that. So I think with content where people trip up is they try to get too fancy. And the bottom line is people they just want to understand the process. And as lenders, as much as we try to help them understand the process, it's very confusing. There's a lot of lingo. And if we can just be real about the process, that's all the content you need.
So it's incredibly important to be selfish in the content that you're putting out and what you're doing, because you're not going to be real if you're not doing it. And there's going to be no consistency. You won't do it over and over again. And I'm really passionate about helping veterans myself as well too. And if you're a manager and you're setting your margins and you have your VA margins that match your FHA instead of your conventional, like, you're not doing it right. I'm just going to tell you that right now. I mean, it's way too many veterans are preyed upon, like you said.
Yeah. And I like, that's the big push in my career, is I just want it to change. And I feel like, I always joke that as soon as veterans are known as the most annoying rate shoppers, I've won because, it's just nuts. Like, I was talking to a guy last week and he was being quoted 4.75.
So just for a frame of reference, in case you're listening to this in 2022,
the rate should be 2.3.
Yeah, we're actually it's Veterans Day that we're recording this in 2020, and like 3 days ago was the cheapest rates in the history of mortgages. So
low twos, right? I mean, low twos, no points. That's kind of consistently where I see the market should be. You've got your big players who are always about 0.5% higher because the money just comes to them and they don't need to try. And then you've got these outliers where they're charging these insane things. Like, I had a gal who was crying on the phone to me because I quoted, her credit wasn't great. It was a little bit over 600. We quoted 2.5 and the other lender 5.5. And they had said it because your credit's not good enough. So we have to charge you this. VA requires it. No, they don't.
VA requires it. Yeah.
VA requires it. That's what these lenders say on everything. Oh, hey, they'll have like VA lender fee, not the funding fee. VA lender, it's a VH. No, it's not. You know, so yeah, that's my passion, as you might have caught.
Interesting. They're telling people on the least defaulted of all the loans that VA requires us to charge you more, even with poor credit.
Yep.
The loans are the least defaulted loans in our country. So awesome. Very, very interesting. So before you became a mortgage YouTube sensation, so you've been in the business for 13 years. How were you deriving your business? What kind of volume were you doing? Was it all rubbing elbows with realtors? What was your business like? And how much more do you like it now, or what do you miss from before?
I like it a lot more now. I can say that because since I am consumer direct, I don't have the same, when realtors are feeding you, often there's realtors you don't want to work with. Maybe they're not the most ethical realtors. And a big point in my career was when I could finally say to those people, bye, bye, see ya, bye. Because when you are being fed by realtors, you do have some sort of alliance to them. And I don't think that's in the consumer's best interest. Like, you can be a really good lender and still protect the consumer. I'm not saying that you can't do that. I'm just saying if the consumer comes to you direct, it's more authentic. So I love that. I love, especially like there's a lot of realtors that are straight up divas. You guys know them. They call you at 10 o'clock at night. They're super annoying. They bird dog you. Like, you could have closed 100 transactions for them in under 20 days. And they are calling you up, status. Can you give me status? I need a status. Are you sure the appraisal was ordered? And it's like, oh my God, please go die. Like, I'm trying to work. So I don't miss that. I do still have realtors that I work with. I do still pursue certain realtors, but they're people that I admire. They're people that are ethical, and they're people that I would trust my son to work with. And that's what I love about my business now, is the choice.
So is your son moving right into the business in 2 years?
It's interesting. I keep on trying to hire him to do stuff. I'm like, do my YouTube, do this or that. He has zero interest. He wants to go to NYU. My husband has a small venture cap firm, so he wants to go work with my husband. I'm not cool enough. It's fair. It's okay. But prior to that, so I built my business. I came in 2007, right as the market was erupting. And I really got into FHA, VA, because no one else wanted to touch it. And then I was working at Countrywide, and I had a manager that's like, oh, you're a hungry little loan officer. Because I was the person that phone rang. I actually got in trouble for answering it too much, because it used to be like, whoever answered the phone got the lead. And I was just like, so yeah. So I started.
Did you raise your hand too much in school?
Did I what?
You raise your hand too much in school? Were you that kid?
No, I would just kind of yell it out loud. Not the best of the rules, but yeah. So it was the foreclosure days. So I got dragged in by being, because Countrywide became Bank of America, we would do pre-approvals on the foreclosures. So I started doing a lot of that. They gave me the parts of California with the lowest loan amounts because I was new. Thankfully, it's been really good to me. So I built relationships with those agents, and then business was really tough, like 2009, 10. But the same agent that told me to get on video told me to learn HomePath. And I learned HomePath and became the expert and chased every single realtor that did HomePath. Hey, have them call me. I know this loan. I can do it inside and out. Build those relationships. I mean, I was 70% realtor up until 2 years ago.
Yeah, I did so much 203K business from 2009 to 2013. Like,
yeah,
I made a mistake of not telling some realtors I did other loans, and all of a sudden I was evaluating things 6 months, a year later. I'm like, man, I did like 10 203Ks for you last year. Did you not close any other business? They're like, you close conventional loans? I was just like, oh, what a fail, Sean.
That happens too. Like, because I'm starting to get that where people are like, oh, you do conventional because of the VA thing. And I'm like, yeah, like I'm still 50%, 60% conventional.
So for everybody listening here, Like there's a couple of really key things. So finding your passion, finding niches. And one of the things that I love when you put those two things together, and with Jennifer being direct to consumer, it's so scalable. And like, I love to work about 40 hours a week. And personally, I'm just done working more than that. I've put in too many long days for too long to not have the team and the business that I have built. And when you have something that's scalable and you provide all the information, like, somebody can just pick up the phone as Jennifer's partner. They very rarely even, I don't know if that's how you're running your business right now, but you don't even need to really talk to you that much because they've already made the decision to use you when that call comes in. And that's just a great feeling.
It is. And it's something that I'm really working on this year because last year I did 70 million. So going from 70 to, if everything closes and we're all having processing fun in the industry right now, like probably 220, right? That's a huge jump. So, and it's market driven, of course, but it's also all the states. So I am adding to my team in terms of like, my assistants are licensed. Like if you're going to have an assistant, you should have them be licensed so that they can quote rates. But I am trying to figure out how to scale bigger more and more because I really do want, I want that VA message out there. Like I really do. And I know the more people that I can get on the front lines, we can just blow it up, which is really exciting.
So Jennifer, somebody wants to find you. Should they go to YouTube? Is that the best spot?
YouTube's a good place to start. You can also go to TikTok and laugh at how terribly I'm doing. Like that might make you feel better. If you're starting out on YouTube and you're like, this is horrible, I hate this, go to my TikTok and feel my shame. It's okay. You just have to suck it up and know that in like 15 years, it will work out okay.
Any other parting words you want to leave our listeners and watchers today?
I think the best thing you can do for your business is be passionate about what you like and be true to yourself. Don't try to be someone you're not. Like when I try to be super professional and polished, it's not who I am, and know your guidelines. Know your guidelines. It doesn't matter how good of a salesperson you are. If you don't know your guidelines, you will fail. How's that?
I would love for every loan officer on the planet to know their guidelines. That would make, at least the ones that work with me, it would make all of our lives a whole lot easier.
And the borrowers. Go figure. And then maybe realtors would be less annoying.
They'd actually trust that we were going to get the deals done when they are sent to us.
Yeah, it'd be good. Okay. Well, I appreciate talking. You've broken me in with my fear of this whole format. So thank you for the opportunity to bore people today.
Well, I appreciate you sharing your light and your knowledge and not boring anybody today. Friends, we appreciate you listening to us. We are going to be live in Dallas on December 4th and 5th. Due to the years that we've had, this is only our second live event that we've been able to have. But go to nextleveldallas.com if you want to come and join us there. Again, nextleveldallas.com. Jennifer, you are amazing. Enjoy being on many, many more podcasts and crush it on TikTok just like you've been on YouTube.
Wish me luck.
Well, have a great day.